Welcome back, everyone, to the Schaefer Stock Market Podcast. I am Josh Selway, an editor at Schaefer's Investment Research. I am recording this podcast on Friday, March 15th, 2019. We ended last week with that dismal jobs report out of the U.S., and that was after disappointing trade data out of China. And those coupled together just added to the growing fears about a potential slowdown in the global economy. This week, however, to start off the week, we were greeted with a Boeing sell-off, and that came after its 737 MAX was involved in another plane crash, killing everyone on board, and it's obviously been a very rough week for Boeing. Countries around the world grounded the 737. Canada ended up being the last country to do so besides the U.S. The U.S. technically was last. They came out. The FAA originally said that the 737 could keep flying, but then after every other country around the world came out, grounded the 737, President Trump brought them in, grounded them in the U.S. as well. And this was a headwind for other stocks as well, especially airline stocks, and in particular for Southwest Airlines, ticker LUV, because Southwest actually has is the largest user of this particular aircraft. And as we wrote about over at schaefersresearch.com, options traders were quick to pick up on that. The stock dropped and put trading picked up on Southwest Airlines. And if we're speaking about broader issues affecting the market, unfortunately, I have to at least mention this week's Brexit developments. Now, I've already come out and said this is an anti-Brexit podcast. I've done my best to ignore the Brexit developments. There's too many. I don't understand what's happening, and I just don't have the mental bandwidth to keep up on it day to day, even though my job sort of requires me to do so. But this week there were more votes, and at the end of the day they pushed back that March 29th deadline, where they were hoping to have Britain leave the European Union. Then that's been pushed back at least 3 more months. So we will have 3 more months of Brexit uncertainty, at least. So more pain for Theresa May and her Brexit deals that she was trying to put together. No luck there, and still don't know what's going on with Brexit. Okay, let's talk about weed stocks. It's been a while since we've hit marijuana stocks, one of the most popular topics in the stock market these days, and I've tried to stay away from them just because they get so much coverage. I like to talk about other things, but this week we wrote about a few different marijuana stocks over at schaefersresearch.com. The first bit of news I'd like to talk about is involving Pyxus International, ticker PYX. That is a tobacco company, and as cannabis gains more legal ground, it's been shifting its attention to the cannabis industry, and it has a hemp processing partner called Criticality. And Criticality just opened a new plant in Wilson, North Carolina, and the hemp process there will be used in Corent. That is Korent. That is Criticality's line of CBD products. So CBD products also gaining a lot of popularity. A lot of people say that they provide relief, anxiety relief, joint relief, many supposed medical benefits involving CBD. Pyxus International has some exposure to that through its business partner Criticality. Pyxus stock has more than doubled this year. It was one of many stocks that came into the year around a long-term low, so it's been trending higher since, and is last seen trading around the $30 mark, and options traders have been targeting Pyxus call options, suggesting that speculators see more upside ahead for Pyxus International. The other name that made headlines this week out of the marijuana space was Aurora Cannabis, ticker ACB. And that was thanks to news that high-profile investor Nelson Peltz signed on as a strategic advisor. So what a lot of these companies are up against is, investors don't know how legitimate they are. They don't know about their long-term viability. These are a lot of young companies, and this is a growing industry with a lot of uncertainty. So there's a lot of question marks around these companies and therefore these stocks. But with Aurora adding Nelson Peltz, This makes it seem like a more legitimate opportunity for investors, and the stock jumped double-digit percentage points on this news earlier in the week. So Peltz is supposed to be helping the company explore potential partnerships, expand its global reach. Aurora Cannabis was trading around $9 per share, and that comes after the stock has rallied almost 75% since its own December lows. I also wanted to bring up Tilray, ticker TLRY. Tilray was the marijuana stock that took Wall Street by storm. It jumped to as high as $300 back in September. That was after trading around just $20 like a month before that. It jumped all the way to $300. It was halted for volatility and almost immediately fell all the way back down below $200. It bounced around a little after that. And in recent months, it's actually been really quiet, down near about $73 per share. It's been almost in a flat line since late January. And the company reports earnings after the close on Monday. This will be the fourth time Tilray has reported earnings. That back in its first release, the shares jumped like 20% the day after earnings, but the last two reports have seen the stock move lower after earnings. And this time around, the options market is betting on about a 10% swing out of Tilray. So some volatility expected to return to that stock, which again, if you just look at that chart for 2019, you had a blip in about mid-January where the shares rallied up to above $100. But since then, they've been hugging that $80 mark, and a brief dip lower lately put the shares around $73. Got to talk about Apple this week. It's been a big week for the stock. The shares are on pace for their highest close since November, and they're actually pacing for a fifth straight win. We highlighted earlier in the week some unusual call activity on Apple. There's been an increase in demand for long Apple call options, but as the stock rallies higher and as we've seen some bullish demand from options traders, this has come as short interest on Apple has more than doubled in recent reporting periods. So that's obviously a substantial increase in skepticism there toward Apple. Traders are betting on a pullback from these fresh highs, and this is setting up a battleground here where some traders appear to be betting on Apple going higher. There's been a lot of buying demand obviously behind the stock. It's spiking again today, 1.4%, around $168 per share, but then clearly plenty betting against Apple as well. So keep that in mind as you see the stock trading in the weeks to come. Another interesting analyst note came out of Mizuho, who had a positive view on the software sector as a whole. Part of this thesis for them was that right now only 15 to 20% of the global workload is done in the cloud. And it seems only logical that that is going to grow going forward as more and more companies adopt the cloud. And it sees two big winners in Microsoft and Salesforce. Salesforce, ticker CRM. Salesforce in particular, Mizuho says, has significant upside. Salesforce stock has already been performing well. Clearly they set a substantial price target there for Salesforce, up at $185. So for Microsoft, they see more growth out of Microsoft's cloud business, which has been one of its biggest drivers and what investors see driving its long-term growth as well. A lot of mid-cap software stocks have done extremely well, stocks with cloud exposure, but here obviously Mizuho is targeting two of the bigger known names in the group and seeing substantial upside ahead. One stock that I check in on periodically is First Solar, ticker FSLR. I like to keep an eye on the solar sector in general. It's just one group that clearly on a long-term basis you would suspect has a lot of upside growth as the U.S. and other countries adopt renewable energy and move away from fossil fuels, and as the technology becomes cheaper and it's more widely adopted by consumers. So First Solar, last year, 2018, it got all the way up to around $80 per share. Then a few things, some tariff related and some more fundamental, ended up dropping First Solar, and it's now down to test like the mid $50 area. We've noted over at SchaefersResearch.com that there has been a strong uptick in call buying on First Solar. Clearly bullish expectations coming out from speculators, seeing upside ahead for First Solar, and it's been moving higher in 2019. It's up almost 30%. Traders expecting this trend to continue for First Solar. And on top of this call buying, you also had Goldman Sachs come out and say that large cap solar stocks have more upside ahead. And this was after Goldman Sachs at the beginning of the year initiated coverage on First Solar with a buy rating. They believe that markets in the US, Europe, Middle East are all going to continue growing. And this part was particularly interesting to me. They said, quote, potential upside emerging in China, unquote. So that call obviously clashes with this expectation about slowdowns in the global economy, or at least Goldman Sachs is seeing that the solar sector is going to remain strong in many international markets going forward. Also wanted to touch on Roku, ticker ROKU. That stock pulled back earlier this week when it was hit with its first sell rating in almost a year. That's according to Thomson Reuters. Loop Capital, LOOP Capital, Loop Capital, downgraded Roku to sell, citing an excessive valuation and increased insider selling. And that same day, Macquarie downgraded Roku to neutral. So some analysts moving away from Roku, who has certainly had its moments since going public. And this is the play on streaming television. Roku has its technology embedded in certain television sets. I have a smart TV and it's a Roku TV, and it works pretty well. And you got your apps right on there. So Roku has been a popular name for investors seeking a long-term or strong upside play in the streaming game as that gains popularity. And I just thought I'd point out that Intuit stock, that is the TurboTax parent, ticker INTU. That stock has been incredibly strong. It's up almost 30% this year, outperforming the S&P 500 index by almost 17 percentage points. And we have some technical data suggesting it could continue to go higher. It's trading at record highs. You just check out that stock chart. It's been quite the performer on the charts. And that's just fitting since it is tax season. So TurboTax, parent company Intuit, it's doing a good job there. It's doing well, preparing your taxes. And we're going to go ahead and leave it right there for this episode of the Schaefer Stock Market Podcast. For all you out there that continue to listen, I appreciate it. Our listeners continue to go higher. If you could subscribe wherever you're listening, leave us a good review, or let us know what we can do better. Check out Schaefer's on Twitter, StockTwits, Facebook, wherever. We're out there. We're even on Instagram. We do some stuff over there. This was Josh Selway. Thanks for listening.